Good morning, good afternoon, good evening, depending on what time you're watching this video. And yeah, today is the 26th of December 2020. So I have a couple of days left in this, what has been a very challenging year. And hopefully everyone, who did make it out in the other end, did so with some heart of themselves saying that 2021 should be a much better year. Okay. So today, I'm just going to be answering initially a few questions that I've got regarding markets, obviously, during this festive season. So I'll just take a few moments to do that. Also, we're just going to be doing a bit of, you can call it analysis. And then later on, I'll answer all the questions related to what is needed to become part of the copycat um, trading robot. If you want to lease a license for the robot, let's say for a month, 6 months, 1 year, what you basically need to do and what the difference is between those two sort of like services, you can say. Okay, so without wasting any further time, we'll jump right into it. So if you're watching this on YouTube, just make sure you like the video if you enjoyed it, and also make sure that you do subscribe and also click on the notification bell so you get notified whenever I release any new material. So we'll be currently looking at the Euro USD on the H4, and one of the questions that I did receive a few days ago, only noticing, I think it was this morning, got a bunch of messages, and one of them had to do with time frame analysis. I know I've gone over this already, but one of the more important things when it comes to analyzing between multiple time frames is that you're not always going to get a perfect match. You might get a down movement, right? Downtrend, let's say, for example, on the 1 hour time frame, and an uptrend on the daily. But on the monthly, if you're looking at the monthly or the weekly, for example, okay, so this is the 5 minutes. On the 5 minute, you see that the trend is down. On the 1 minute, you can see, I don't know, it's choppy or something. Yeah, it's a bit choppy and then looks like it's counting down. But if you're looking at the monthly time frame, also it seems like the trend is actually down, right? It's going through a consolidation. So if you try and sort of like make all those time frames fit, you're going to have a very difficult time taking any positions and being in line or just making a trading decision in general. So what you want to do is just isolate 2 or 3 time frames that align with what sort of trading you actually are. So if you're scalping, you're looking at short-term positions, you use, let's say, for example, the 1 hour time frame. Okay, and then you drop down to the 15 minute, and let's say your entries will be on the 5 minute. Apologies, it's just a mess here. And let's say you're looking at swing trading, for example. So if you're a swing trader, you obviously need to know where the market is going on the mid-term trend, right? So mid-term trend, because you're going to be holding your position for more than a day, right? So scalping, you're looking at anything from a couple of hours to a couple of minutes, but it's all within a day. So that's basically the nickname day trading. And daily, 4 hour, and 1 hour you might use for your swing trading, because at least you can see what's happening with the daily candles, right? On the daily spectrum, you can see, okay, the trend has been up on the daily. On the 4 hour, take a closer look, you'll see that for the past 2 weeks, right? So last week and the week before that, the market did make some significant pushes to the upside, but eventually pulled back into that range again. So, and when you look at the 1 hour, for example, so on the H1, you can see, all right, for the past 2 days or so, the market was just basically ranging sideways. All right, so within a very tight range. Before that, the range was a bit wider, but still within a range. And then you might use the H1 for your entries, which means whatever candle that basically closes, let's say, for example, on the H1, let's say it closes off on a pin bar or it closes off on an engulfing type of candle, that's the sort of, I can say, confirmation you'd need on the 1 hour in order for you to then take the position from there on out. So if you're a position trader, you might use the monthly, right? So you might use the monthly because you might be holding your positions from a month, 2 months, 3 months, 5 months. You might be holding onto your positions for a couple of years. So it's very important that you have a big picture view of what's going on within any type of market. All right. So because you're trying to forecast or project where price could go over the long haul. You're not looking at what the price is going to be doing over the next couple of seconds or so. So let's say we use monthly, right? The weekly, and our daily candle will probably be our entry. So that pin bar we might have been looking at on the 1 hour when we're looking for any swing trading opportunities, we might go monthly, right? Do our analysis on the monthly, for example, right? Let's say we just find a nice resistance level, okay, support rather, and we have a nice resistance level right over there. So 125.57, right, and 149.39 seem to be significant levels when it comes to the euro dollar. We can see previous price action around these points over here. Okay, market was a nice support, market broke, then came back to retest. So we could have a possible rejection once price comes into that area again. Right. So if we do get a push to the upside, let's say we look for a daily pin bar, you know, daily pin bar just below 125.57. So something along these lines. So expect the market to continue edging higher, right? You might get even it sort of like trading above 125.57, but eventually we'll want to see it pull away from that very significant level, previous significant level. So then you'd wait for the daily candle to close, let's say, below 125 and reject that 125.57 level in order for us to sort of like have any sort of confirmation for the short of this Euro USD. Okay, so that would be the main application of the 3 time frame sort of like method. Because if you start incorporating way too many time frames, you start including way too many time frames in your analysis, then you're gonna be very confused. You're gonna have a very tough time seeing opportunity, getting in and out of opportunities, because you're going to be constantly trying to look what this time frame says and that time frame says, and sometimes they do conflict. A lot of the time that they will conflict, and that's going to cause you to actually miss out on a lot of opportunities. So I hope that answers that question. Okay, one of the second questions was basically how do you see if the market is trending up or is trending down, right? So as we all know, the market can either move up or down, right? Sometimes it just chops around sideways, but generally the market has about 2 directions that it can typically go, right? So that is up and down. So we don't really have a lot of outcomes possible in the market. So one of the easiest and simple ways is either placing a, let's say a, what do you call this, a trend line at these swing highs to see if the swing highs are being broken. Right? So what you're trying to see is the momentum towards the downside or the upside. Okay. Because this might seem like a bit of a choppy sideways type of movement, but as you can see, the previous swing high is market is not closing above the previous swing high. Okay. It hasn't been closing above the previous swing high, but it did manage to break the previous swing low on this end. Right. Okay. And over here as well, the market managed to trade below the previous swing low point. So in that sense, we can sort of like have a pretty good idea that, okay, the market could be trending downwards. And therefore, if we want to have more bang for our buck, we'd rather be looking at short opportunities. I mean, I don't say you can't buy, because obviously if you're looking at how the market reacted when it reached below that 120, I think it was trading exactly around 21.85, 21.85 years. I mean, this was about a 2,000 pip rise, okay, 2,700 pips. So it was a pretty decent rise. So I don't mean you can't exactly trade against what the market is telling us is a downtrend, for example. I'm not saying you can't buy within a downtrend, but it just basically has to make sense in terms of how many pips we can actually make out of that. Okay, it's no use trying to buy when the market is close to the swing high over here in a downtrend. Right? So if the market is heading downwards, and let's say the market is somewhere over here, there needs to be enough. I really don't want to say this word, but I'll say it. Okay, it's more of a slang word. There needs to be enough pippage to make it worthwhile, right? So there needs to be enough pips to make it worthwhile for you to take the position. Otherwise, I mean, you just basically sort of like trading into a wall, right? You don't really want to do that. Um, you'd much rather be safer waiting for the price to reach that level, which was what we just discussed here at 125.57. So obviously we'll have a look at that over the next couple of weeks or so. Okay, so that is one way to look at it. And the second way is obviously by throwing in the custom moving average. Okay, I'm pretty certain everyone has. Okay, I'm pretty certain everyone has encountered the moving average before in one of my videos. So if you haven't, I think you can just search for that on the channel. Now let's just use a yellow color for this. Input, we can use a 200, even that simple moving average is fine. Okay, now one of the simpler ways is just to throw in a moving average, right? So if you throw in a simple, you can use the exponential, and this helps us to highlight where the trend is actually going, right? So when the trend is actually accelerating, it's really good in showing us that. Obviously, as well, we can use the moving average has a form of support and resistance, but that's not what the session is about today. So as the market moves above the price, we basically consider that to be an uptrend. It could be a short-term uptrend, it could be a long-term uptrend, but it is an uptrend. And let's say we go into 4 hour, just want to show you guys, okay, this is the uptrend, and this is more or less what a downtrend would look like. The price would be trading below, predominantly below the moving average. And when the price is sort of like in between, right, or when the moving average is in between the price, then in those cases or in those instances, then we'd consider that a ranging market. So that means that the market is actually moving sideways, and therefore would have to employ some sort of a range bound sort of strategy, right? So probably scalping the highs and the lows until the market sort of like restarts the trend again, and then we'll focus on just getting the meat of the trend, not trying to get the high and the exact low. And the market will go back into a range, and then once the trend restarts again, we're just looking for those trading opportunities towards the upside. So I do hope that this video actually helped you guys, and I know it's festive season for most guys, and everyone is out relaxing. So if you do see this, just make sure you take note. If you do have any question, right, the link to the Telegram channel is there, and whatever questions that it's going to be in the description. So whatever questions that you might have, don't hesitate to shoot them through. And as I said earlier, I was supposed to close off the copycat trading. Copycat trading, you just open your account, deposit funding into your account, and you basically link your account with ours, and it just copies all of our trades. We basically do all the trading, set our stop loss, set our take profits, and your lot size is automatically copied from our trading account. So it's just going to be account relevant, I can say. So if you have $100 account, your lot size will be, let's say, 0.01 or 0.02, depending on the size of the account and the risk percentage, and obviously the size of the stop loss. But all of that will, and because obviously the account we trading will probably be a bit larger than your deposit, for example. So if you have a $20,000 or $50,000 trading account and you have only $1,000 trading account, we won't be using the same lot size. So the lot size is adjusted to fit basically the trading account. And as I said, with the trading robot, I think there's about 2 licenses that we are currently offering, and those will be the last. All right, we will not be reopening that again. And I think we're just going to focus on the guys who are currently using it. Most of the guys are really happy. Some are, I can say, a bit confused about how the entire process works, and we've been in touch with them. And yeah, I think everyone right now at this moment, okay, I think everyone right now at this moment should be positive. It doesn't matter whether they started a bit late due to some technical difficulties or whatever the case may be. But I think from now on, as I said, we'll post the results in the Telegram channel to see that all of the trades that we place actually match yours. So I'd urge everyone who has a license, whether it's month license or 6-month license, to make sure that you check in the Telegram channel to see if the trade that we placed are exactly the same as the trades that the trading robot actually placed on your account as well. Sometimes, as I mentioned, we did have an issue with the time. Okay, GMT +2, GMT 0. You know, with all these different brokers and all these different times. So we did actually send out an updated version of the trading robot, which basically adjusts for that. So I don't think there should be any issues, but if there are, the link will always be in the Telegram channel. You can just give us a ring there to ask any questions that you need to. So, guys, hope you guys enjoy the rest of the weekend and also the festive season. I'll be back with another video. As I said, don't forget to subscribe and also like and share the video. And cheers.